If you keep up with the marijuana sector, or you have an interest in volatile stocks, you probably heard about the explosion in growth Tilray experienced in about a week. Many investors and participants in the financial markets are left scratching their heads wondering how the stock exploded by such an immense degree. What you have to understand about Tilray is their shares float relative to shares outstanding is very small. Shares outstanding is the amount of shares the company has issued. Shares float is the amount of shares that are actually traded. Now usually these two numbers can be pretty similar, but the difference is with Tilray, they have a number of employee stock options and shares held in private by investors that are considered RSUs or restricted stock units. When a company recently goes public, often they have to incentivize their employees and initial investors by giving them stock options. As is often the case, these stock options have an exercise price well below the company's market price that's sold on the stock exchanges. However, to prevent from all the employees selling their stock options right away and flooding the market and therefore messing up the liquidity and the supply and demand, they're often restricted for a time period before they can sell. These restricted stock units for Tilray expire sometime around January 2019. So what does this mean? Well, Tilray has 17.81 million shares float, and their shares outstanding are 76.48 million. What that means is roughly 3/4 of the shares Tilray has are not available on the market, and therefore the small amount of shares that they do have on the market is very limited. This limitation in shares, by the basic laws of economics, means that should there be any demand for these shares, it can lead to high price swings. So we've comprised some data of Tilray relative to the other big players in the marijuana market to get a rough gauge and more complete idea of how limited Tilray shares actually are. As you can see, Canopy has the least amount of shares float at 177.98 million and Aurora with 537.56 million, but even the smallest amount in Canopy is extremely large relative to Tilray, and therefore their stock will not be subject to huge fluctuations in volatility just from basic activity in the market. What you want to compare is the float relative to shares outstanding. Another thing you want to look at is the average 10-day and 3-month volume. The average 10-day volume of Tilray is 18.55 million shares, whereas Tilray only has 17.81 million shares float, which essentially means more shares are being traded than the company has available to trade. This figure essentially tells us all the shares that the company has available for trade has gone through at least one round of exchanging hands and then some, because the volume is greater than the shares float. Again, for the sake of relativity, we compare this to the other players, and as you can see, that's not even close to being the case for the other guys. Now, the vast and sheer exuberance regarding the marijuana market, paired with Tilray's very limited shares float, is a big contributor to the volatility and the uptick in stock. Limited shares means limited supply, and given that there's a lot of demand among investors for exposure to this new and exciting industry. However, this isn't the complete story. Tilray also has a large level of short interest on its stock. Short interest is regarded as a portion of a company's shares that are held by short sellers, and is typically used as an indicator of bearish sentiment. These are essentially investors that are looking to profit off the company going down in value. What you should note here is Tilray's short interest is substantially larger than the other cannabis players. Tilray's short interest is at 21.61%. 21.61% of those holding the float shares are short Tilray. All the other guys in the cannabis sector are from 2 to 4% that we mentioned earlier. Now, short positions can vary all the time in terms of duration. In the case of Tilray, these short positions are all very short term, and this has left them exposed and subject to what we call a short squeeze. Shorting involves selling a stock first and being forced to buy it at the end of your contract length sometime in the future. Now, you're doing this with the hopes of the stock price going down so that when you buy it in the future, you profit off the difference. It should be noted that these shares must be bought at the end of the short contract. And because these shorts are very short term, usually just a few days, ultimately this means that the short sellers are being forced to buy back the stock. This additional buyback of the stock is again contributing to a surge in demand. As we can see from the database from the Nasdaq, here's some of the biggest short positions on Tilray, as well as the small duration of these short in terms of length. Now, when you have the limited amount of shares that Tilray has, and you see these short positions and the quantity of shares short, it only makes sense that this contributes to the volume and contributes to driving the stock price up. So in essence, the volatility around Tilray that we experienced these last couple of days is a two-part explanation. You have a limited and small share float, you're mixing this with an industry in very high demand, and on top of that you have a high level of short activity, which has created a short squeeze. We hope you found this information informative. Thanks for watching, guys, and happy investing.